Welcome to 2023 Economic Depression and Preparation Channel. Thank you for joining me on this Sunday, June 18, 2023. Happy Father's Day to all the fathers, fathers-to-be, and past fathers. We love you. We appreciate you and all that you do in America and Canada, Europe, Africa, Asia, all around the world. We just thank you for our fathers. We also want to give a special shout out to the first weekend of summer. Summer's first weekend. As you know, Juneteenth holiday is tomorrow. We appreciate all the sacrifices made for freedom, for African Americans and others, Lord. We appreciate also the not just summer and Juneteenth, but we also appreciate this week of being here, still being able to have preparations and have provisions in first world countries and other countries such as food, water, shelter, security, freedom of speech, freedom of religion, stuff of that nature too. So we're thankful and grateful for that. Now, please be sure to subscribe for the latest interpretation of financial news as it occurs in the markets on this channel. We're not giving financial advice. We're not financial analysts or advisors, but we do provide financial interpretation for your digestion and enjoyment. So today we're going to be talking about briefly on Sunday, because it's a holiday. It's abbreviated schedule for me because of all that is going on. And of that nature, you may have things going on as well. So right now we're going to get into it just briefly here with this summer doldrums, quote unquote, market watch. Stocks put to the test as doubts, quote, linger on more Fed rate hikes. As you know, the Fed paused this month. There was a 50% chance, a 50-50 chance that they would pause, and they went ahead and paused. I had said earlier that they would do a 25-point basis increase. That was incorrect. Now they're on a pause, but more Fed rate hikes could be on the horizon here, according to MarketWatch.com and other financial analysts. Now, one of the reasons why investors are still bullish on this whole pausing thing is because inflation, they say, has been falling somewhat, but it's still not down to the 2% inflation goal that Fed Chair Jerome Powell spoke about. And because of that, that means that there's likely more increases that need to be happening. He's just pausing now because it's in summertime and we've got a lot going on, transitioning with these budgets, transitioning with the political landscape that's going on with Congress and recess, going to be going into recess and all of that things that may be happening. But he is expected to resume rate increases after summer. Is what they're saying. But according to the media, they're spinning this article as if the rate increases will not be happening until later on, end of this year, like December, and then into next year, 2024. It's true that inflation has fallen from its peak 9.1% last June, but it's still elevated above 4% as we know right now. So the stock market, Wall Street slips. It had a good gain. It was the best week since March came to a close, but it will continue to hammer along. Remember, Venezuela's stock market was up. Remember, the other stock market was up, and it was growing and growing at the collapse. So having a good stock market and having prices go up and home prices and car prices and all that, that's just a sign of hyperinflation coming soon. It's not a sign of a booming economy by no stretch of the imagination, ladies and gentlemen. And right now, extreme greed is driving the U.S. market, according to CNN Business. Like you see, the greed index is at 82. And right now, people are just, buying low with the hope of selling high later on. But here's the problem. A growing number of small businesses worry about inflation and the economy's future. As you know, small businesses are the backbone of America. 70% of the U.S. economy is consumption, spending, in other words, and with these small businesses. If small businesses can't get access to easy credit as the rates go higher, that becomes a concern for many businesses, no matter if you're in the West, the Midwest, the Southeast, the Northeast, you name it. That becomes the Northwest, that becomes a huge concern. So right now, things are looking good for small businesses as they come out of this pandemic. However, right now, the optimism is waning. Inflation is down to 4.9% in the 12 months ending in April. That's according to the Bureau of Labor Statistics. However, the Fed Reserve has raised interest rates, as you know, 10 times since beginning to raise its rates back in March 2022. And this has really slowed down the pace of hiring for small businesses. They know that they can't keep pace with payroll and operating expenses with these rates going up. That means all the business credit cards, interest rates are higher. Lines of credit, if you get a line of credit, a good line of credit, you're going to be paying back more money. than what you're actually bringing in many cases in these businesses with these high rents and the commercial real estate. Commercial real estate is falling too, but the vacancy rate has not reached a critical level except in big cities, super mega cities like New York City and stuff like that. Yeah, there's a lot of empty spaces downtown and all of that, but if you're outside of those big megapolis cities, it hasn't reached a critical mass yet. So the vacancies for commercial real estate and those people holding those notes of commercial mortgage-backed securities. So therefore, that means that small businesses are going to have to make do with tighter credit and less hiring pace than they had, say, last year and just when the pandemic was getting started 3 years ago. And so because of that, this is the case what we're facing here. We're facing a situation going into the summer where we're going to have high taxes, high prices remaining elevated in food, gas, utilities, transportation, airfare, and also possibly a tax raise on Social Security benefits for those who get Social Security checks. There could be tax increase on that coming into the winter and next year, according to this President Biden and the administration, to help the shortfall. So we have a lot going on, a lot of moving pieces. The good news is with this economy is that inflation is coming down, but it's not coming down fast enough. And so what does that lead us to first? That leads us to what we call stagflation. We have high prices, stagflation. We will never be able to get to the 2% goal. It'll take at least 6 to 7 more years of these type of 25 basis point rate hikes to get down to 2% inflation, because there's so much money that's being printed into the system, not counting a shockwave event like a war or we're in a war with Ukraine and other countries, not counting that, or a natural disaster. The hurricane season has started, other seasons have gone, getting fire season and started. So we spend more money on that, we could really be in a disastrous situation here. And like I said, when you're looking at preps, the couple of things that you want to do, prepping, can't cover everything, but the basics of it obviously is security, food, water, medicine. All of these are going to become less and less available as we come in time, because you never know. There could be an EMP attack where we lose power, and then none of our stuff works. So you want to be thinking about that. Solar power generators, regular generators, things of that nature, things that you know that the prices are going to be going up either on Amazon or on regular. If you go to the physical store like a Lowe's, a Home Depot, a Ace Hardware, prices are going to be going up on this stuff because they know people are looking for it. Even if you have masks, still keep your mask, because remember, just because we're out of one pandemic, doesn't mean another pandemic is it could be on the horizon. This time it could be something other than in the air, So, but just keep your KN95 mask, your respirators, keep all of that. In fact, don't throw it away. Your face shields, because you never know when the next crisis could arise in your town or city, no matter even if you live in small town America or big town city America. So it's going to be interesting to see as we head through these next 2 weeks of June and into July the 4th holiday in a couple of weeks here, 3-4 weeks time frame, how the stock market fares. Is it going to be a stock market where it's going to be booming stock market, or is it going to be a sign of a flat stock market where we're just rehashing the same 34,000, 35,000 Dow Jones, mark and all of that? And I think it's all going to depend on not just the rate hikes and rate cuts as well, but it's going to depend on the timing of the hiring of these small businesses, and also whether or not these new graduates that are coming out, professionals that are coming out, that have just graduated from the summer, this month and last month, college graduate, how that report comes out and how that factors into the job report. We will see if the professional business sector, the hospitality sector, if all those are going up by the end of August, then that means that there's possibility that the recession could be pushed further back into 2024. If not, that means the recession could begin as early as Thanksgiving of this year. And then it's just a matter of will it be a mild recession or a severe recession. Most of us have been calling for a severe recession, meaning it's going to last the next 5 to 7 years, and I think that's more the line of what we're all thinking if there's going to be the great reset that everyone is talking about. So be prepared, stay blessed. Thank you everyone for listening. Enjoy your holiday weekend wherever you may be, and be sure to subscribe and tell others to subscribe to Preach to Me for the latest news. Thank you very much. God bless.